There is a good bet you own this stock somewhere in your portfolio because DuPont is widely held. And now the bitter month-long proxy battle between chemical giant DuPont and Trian's activist investor Nelson Peltz has finally come to an end. Peltz loses. DuPont's side wins what they wanted. DuPont stock, though, is losing, taking a massive hit this morning. It's down about 6.5%. This follows the news that Peltz did not win what he wanted, and that was 4 DuPont board seats. He lobbied hard for it, spent a lot of money, didn't get it. But something you would have known yesterday if you were watching the Fox Business Network is that Peltz was a long shot anyway. Here's why it matters to you. Nearly 20% of DuPont is held by mutual funds. So the odds are this could be impacting your portfolio somehow. Charlie Gasparino now with more on the story.
We should point out that we first broke that Peltz was pessimistic about winning his battle against DuPont last night. We did it on the Wills Report. We did it this morning on IMUS, and we were pretty much on the money. I would say that Peltz thought he had an outside chance of getting one seat, his seat, and he even lost that. So this is a resounding loss. We should point out that if you've traded on our information last night, and yes, Eric Bowling, a retail investor, can trade after hours. I got some weird email from Eric. Maybe he has a lousy broker or something. But anyway, you can trade after hours. And if you took our advice, if you listened to us and you either shorted the stock or sold your shares, you would have either made or saved some money. So that's what happened. Now, here's the bigger story. And I think this is kind of like going somewhat unnoticed by most of the media, getting it here at Fox Business. There was an alliance on this deal, an interesting alliance between mutual funds and index funds, big fund money management complexes aligning up with corporate America against the activists. And that's something that you're going to see more and more, I believe, going forward. Larry Fink, who runs BlackRock, has been very vocal about how he thinks activism is short-term investing, that they're just looking for pops in the stock. They're not looking to improve shareholder value. I think he's wrong on this, and I think he's really wrong on this, because if you look at particularly Nelson Peltz's record.
Well, I was going to say, it depends on the activist.
Right, and most of the major activists that I know, Nelson Peltz, even Carl Icahn, he used to do, he's in these stocks for a while. He's advocating for changes, and he's advocating for change. They're advocating for changes in a way that I believe is long-term oriented. Nelson Peltz wants to work with management, and so I think that argument is wrong. So now you got to ask yourself, we know Larry owns a huge chunk. How much do the
69%, and this is why it matters to you folks, 69% of DuPont shares are owned by hedge funds, mutual funds, and pension funds.
Right.
So
okay,
you got it somewhere in your portfolio.
So you're right, but even more than that, if you look at the numbers where they broke down, this is why Peltz was pessimistic last night. He knew the index funds and the big money management firms were going to vote against them. That's why last night we were able to report that. Now, here's the rub. What is the conflict of interest between the Larry Finks of the world? I'm not saying Larry Fink personally, but it may be true for him. But these big fund complexes and these big corporations, why do the big fund complexes want current management to stay in place? The only thing I could think of is that there is a conflict of interest here. We should point out that the Fidelities, the Vanguards, the BlackRocks manage pension funds and other assets for the big corporations.
You mean they're not just interested in a higher stock price?
They have,
because they're 6% down right
now.
But
they have all sorts of interests, including clipping a coupon of a dividend, and maintaining current management where management still hires them for other things. So there's a lot of conflicting interest here. It's not purely stock price. And I would say this about the activists. The activists, when they're in it for the long haul, it's hard to argue that with what Nelson Peltz said here. He wanted 4 board seats because DuPont was kind of a sleepy giant. Okay, let's be honest here.
Well, he wanted to cut the company in half.
He wanted to change management, do all types of stuff.
But Ellen Kullman has done a good job overall, long term, as the CEO.
Who knows? The stock is coming down for a reason. And I'm telling you, they shareholders saw
about. Maybe people were in for the arbitrage for that.
I don't know. I think investors see this company as one of these sleepy big giants. Listen, when Carl attacked Apple's a great company. We all know that, right? They are holding gazillions of dollars of cash on their balance sheet, not doing anything with it. He attacks them. He calls for a buyback. They do a buyback. The stock goes up. That is like logic. You know what I'm saying? Look what Carl did with eBay and PayPal. Again, it was logic to break it up.
Yeah.
And he got his wish, and it's been good for shareholders. And I'm just telling you that this is a very dangerous trend. When Larry Fink I believe teams, it's more dangerous an activist investor when you see entrenched interests like the Larry Finks of the world, who have Cheryl Mills on his board and is supporting Hillary Clinton and supporting corporate America, the entrenched interests of corporate America, against average shareholders and activists. That is a bad trend, and that is something that we all should worry about here.
Charlie Gasparino breaking it. That's why every day, 3 p.m., Charlie breaks the big story right here. Thank you so much.
Anytime.